The following is a presentation of TFNN, The Trader's Edge, with your host, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the December 3rd, terrific Tuesday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call the Universal Quest. Not Johnny Quest, the Universal Quest. You know, George Leonard, in his book Mastery, and if you haven't read that book, I'd put that on my list out here. His book Mastery talks about enjoying the plateau. This, folks, is really important. Enjoying the plateau, because so often we find ourselves racing to get ahead, thinking so much about our next achievement that we don't appreciate the time in between. Look, here's the deal. If we don't stop to smell the roses, we can lose our motivation. And when we lose our motivation, well, we become unhappy. And happiness is what it's really all about. You see, without happiness, our potential gets blurred. And without potential, guess what? We'll take no action. And with no action, we get no results. And without results, good or bad, we do nothing for our belief system. And our belief system is the whole trick to the entire game of life. It's our belief system. It's why I so often talk about becoming your own electrician when I start off the next hour's show. It's really about rewiring our belief system. So important for us to understand it, so important for us to be able to share that message and help our kids out there. You see, happiness is not in the getting. Happiness is in the becoming. And happiness is the universal quest. Happiness, folks, it's both the joy of discovering and it's the joy of knowing. Happiness is the result of an awareness of the full range of life, and that means opening ourselves to different experiences, sounds, harmonies, dreams. Dreams, and outcomes. Dreams and outcomes, folks, never stop dreaming. Happiness is the joy that comes from designing a life that practices that fine art of living well. Happiness is found in having options. Listen closely. Happiness is found in having options. Options of doing what we want to do instead of doing what we have to do. And when I say options, I mean choices. You see, if you're not happy today, write down at least 3 options, 3 choices that you could make that, in fact, could make you happy. Now, how about would make you happy? It must be 3 or more. It's got to be 3 or more because, you see, one choice is an ultimatum. Picture as you were raising your kids and you needed them to do something, you pretty much said, go do this, right? Here was the whole trick. You can't just use one option, one choice, because when you do that, it's just simply an ultimatum. So don't give yourself an ultimatum when you're trying to figure out how to be happy or whatever the outcome it is you want in life. And 2 choices, guess what? That creates a dilemma. That's A or B. You want to have 3 choices out there because when you've got 3 choices, folks, it's powerful. It's empowering because you've got options. Now, if by chance you're not happy at this moment, the natural response is to say that nothing about my situation makes me happy, and coming up with one option is hard to do, let alone 3. For those of you, I say, I know. I understand. But my question to you is this. If you could come up with a choice, if you could come up with an option that would make you happy, what would it be? What could it be? You see, always remember that questions are the answer. Ask a better question, and you'll get a better answer. Don't be asking what's wrong with me or why am I not loved. Instead, focus on what's right with you and the love you can give. Because, folks, when you are giving, you are living. The happiness that we each are searching for in the future, folks, guess what? It must be found today. Take time to enjoy the plateau because happiness is the universal quest. Let's go check out the happiness in these markets here. Happiness if you're a bear and you're short. Right now, you've got the Dow futures off 82 points. They're trading out at 15,917. S&P futures down 7 points, trading out at 1792.75. Look out below. NASDAQ futures, they're trading off 5 points at 34.78. It's going to be the NASDAQ that's going to have to save the day, if there is going to be a save of the day. Russell 2000 down about 4, futures down about 4 points, trading out at around 11.26. King dollar back 287 ticks right now off 28 cents, trading out at 80.65. Our call-in number 877-927-6648. Gold futures here, they're off about $3, trading out at 12.19. Silver down 20 cents, that's off 1% again here this morning, trading out at $19. Light sweet crude flat, that's out at trading at 93.87. A quick peek across the pond out here over in Germany, over in Europa. You've got the DAX is off 139 points. That's off 1.5%. Heck, the FTSE's been struggling out there. It's off 0.9%. It's down 58 points. And a mixed bag over in Asia last night. You had the Nikkei up 95 points, 0.6%. Hang Seng off 0.5%, down 128 points, and the Shanghai up about 0.7%, up 16. So where do we begin? You know, if you caught the show yesterday as we were surfing, as I was surfing through charts, there were a couple things that truly caught our fancy out here. And it caught our fancy because I was like, that is pretty interesting. Now, one of those charts that we were most certainly looking at, we'll start off with it. That's our favorite currency pair. At least it's my favorite currency pair. I believe that it should be yours. You should adopt it as well. That is the euro, Japanese yen. We're not even talking about the U.S. dollar. We're talking about the euro, Japanese yen. Why? Because it paints the direction of where our markets are headed to. And you know what? Yesterday, we pointed out the candle session from Friday. That candle session from Friday, that was a little doji candle out there. And I mentioned that resistance was not a matter of whether yesterday's candle closed higher or not. It was whether or not yesterday's candle or any candle subsequent to that Friday doji is able to take out the high, because that's really the resistance area. The high of 139.69. Yesterday, the actual intra-session high got up to 139.69. However, this morning, we saw a move up to the high of 140.01. 140.01. Now, here's the cool thing. If you like the lightning bolt pattern out there, if you like the A to B equals CD pattern, and you like the price projections that it gives you, every now and then it kind of hits it right on. I mean, X marks the spot. If you take a look at the swing point low from the trading session of August 12th, that's a price point of 127.95. You take the B point out here, that came in on September 19th. That level was out at 134.93. Make the C point move down to the bottom of the consolidation level on October the 8th. That's at 131.12 out there. 1-to-1, A to B equals CD. The 1 to 1.272, 140.01 out there. How about that? Hit that to the exact pip. Oh, my goodness. Now, what we're seeing here, you're seeing a move back below the resistance level of that doji candle out there. And the measured move, that's the measured move. That's the equal to or greater than the exact consolidation level. I mean, it has done everything that it needs to. Of course, we can see here it's in the extreme overbought territory. That's because if we use that 14-period relative strength indicator, it really gives you an idea of when things are overbought, oversold, and then it's really the next move that helps us understand whether it's bullish or it's bearish. If it's bullish, you won't see really much of a pullback as that condition gets worked off. And right now, we don't have a ton of information. We do see it's trading towards its session lows. Of course, that has helped to spur futures to their downside move at this stage out here. So we'll see how this plays out. But right now, we've seen 2 days, including today, and today's session's not over, rejection of a resistance area, and that suggests a pullback. Now, remember, this is directional. This is directional. This doesn't give you a dollar move or what have you. But a normal move, in this case here, going from the swing point low at the bottom of the consolidation on November 7th all the way up to the high that was put in here earlier this morning, is the 0.618 retracement. That takes you to about 134.57 back into the consolidation area. We won't really worry about that so much. But what should happen is at least to move down to about 135.45. Now, if it doesn't do that, that's telling you there's a bunch of strength out there in that euro Japanese yen. Look, I'm not expecting that to take place today, but I am expecting that we will begin to see a move lower. Look, a dead cat bounce takes you to 136.65 out here. So we'll see. This is going to be important, and we will be paying attention to it. So that was one of the little morsels out there. Of course, the other morsel that actually showed up on the screen here yesterday as I was doing, it might have been the 10 o'clock show when I was doing that, and I just simply went ahead and looked at the VIX, and when I pulled it up, I said, boy, that's interesting. I did not expect that yesterday. And what was it that I was not expecting? That was to see the VIX had gapped up, small gap up, but it was trading above the 50-period exponential moving average. Now, that number out here is 1379. The actual low that came in yesterday, 1378. There was a time period here, maybe around 1231. It was probably more likely around, 1-ish. 115 or so, when the VIX had pulled right back to that 50-day exponential moving average. It was like teetering. Okay, is it going to just simply fail to get above the 50-day, and why is that important? Well, I got these yellow boxes. We went ahead and did it yesterday. We went back over a year, and we took a look at each time the 50-day was above, the VIX index was above the 50-day exponential moving average, and each of those showed a retracement in the markets. 877-927-6648. Give me a call, folks. Love to hear from you. Be happy to answer your question. Take a look at your stock chart. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. As we peek in on the ES Mini, I've got the 120-minute chart up on my screen here. This is the December contract that we are taking a look at here. And the 1797-ish area, that is one of the primary trading range boundary lines. You can see that prices below that level. If price is not able to get back above 1797, it suggests a move down to about the 1777-ish range out here. Now, we can see as I pull this down, what we can see here, and here's what our expectation really needs to be here. Not necessarily right at this moment here, but, throughout the day, let's not, what should not be unexpected is some type of move sideways to a bounce. Now, the reason I say that, the ES Mini here on the 120-minute basis hasn't been this oversold since the bottom that was put in back here at about 4 o'clock in the afternoon on November the 7th. So, it is now down, moving into that. It's in that extreme oversold area. Doesn't mean it has to bounce right now. Again, this is a 120-minute chart out here. But what we should see take place is maybe a little bit of ease of. That doesn't mean it can't move lower, by the way. But at some point in time here, and again, it's a 120-minute chart out here, that we ought to see some ease up here and a move sideways, maybe a bounce, something like that. But if we take a look at right now, just simply retracements off of the most significant earliest bottom out here to where we're talking about right now. What I mean by that is just simply coming back here to the time frame at 4 o'clock in the afternoon on November 20th. So if we go from that swing point low all the way to the high that was put in here, and that was at 12 noon. That was on Friday. That was up at a price level of 1812.50. What we'll also see is that we are below the 0.382 retracement level. So 1789 is a very likely target. We're at 1794 so far. Intra-session, the low has been 1792. So 1789, that's a likely area. 1782 would be the next area there. I'd say if it gets to 1782, push to 1777 before we would start to see any meaningful turnaround. But we are in the 120-minute chart. We are in that extreme oversold territory. Let's go check in on the 30-minute charts out here. Let's go check in on the 30-minute charts here for the Euro, Japanese yen. If we take a look at that, you can see at this stage here, it's got more room to run to the downside. That ought to put some pressure on the markets here, continued pressure on the markets. So if the Euro, Japanese yen is going to run a bit lower out here, that ought to put some continuing pressure here as the market opens this morning. Now, if we take a look at the 30-minute chart for the ES Mini, well, it was toil, double in trouble. I got to get that old Macbeth saying out there. It's too long ago. But what I can tell you is that we had price get below that hammer candle that formed out here at about 4 o'clock in the afternoon. That was on November 25th. The low there is 1798.50. Yesterday, if you were wondering, yesterday's move lower, that took place at 4:30 yesterday, 4:30, depending if you were watching the futures contracts out here. What we saw was a push lower into that hammer candle, which held as support. That big final push down coming in the 4 o'clock close out there. That was important for the market to break through that. Well, you also had the apogee lunar phase, one of my favorites, apogee and perigee. Perigee doesn't come until tomorrow, but apogee out here, that's an invisible support and resistance level. 1794.50. You're trading at 1794 right now. That area is threatening to be broken. You can see prices really in the body of a candle is the essence of price. This is 30-minute chart out here. This area has not been broken with conviction, but we can see that I can see, you can see it as well if you're watching our charts here at TFNN. If you're listening on your mobile device at TFNN.mobi or a radio station, we really appreciate that. Remember, you can catch the archive of this show on Channel 9. Now, coming in here at 7 o'clock this morning, you want to talk about getting down to extreme lows where that rubber band was ready to snap. And this is a bit bearish out here because that rubber band coming in at 7 o'clock this morning, about as low of a reading that you can get. And that said that the market needed to work that condition off by bouncing or working sideways. There was not much of a bounce that took place in order to begin working off that condition. That actually is bearish out there. When you get that stretch, you expect some kind of snap, some kind of a snapback. We have not seen that take place thus far. So right now, the reading of the meaning is that this is more bearish than it is bullish out here because that was really an extreme low that came in during that 30-minute session at 7 o'clock. So what is it that we're going to be paying attention to today? Well, look, folks, when the market opens up, we're going to most certainly be paying attention to that VIX index. And if that VIX index stays above that 50-day exponential moving average, look out. Look out, because that is where all of the carnage is done in the markets. And I mean carnage. So it could be the beginning of a change in trend here. Maybe a day, maybe a couple of days. Can't tell you that. I can tell you, if price remains above, the VIX remains above that 50-day exponential moving average, it is not a good scene for the bulls. We'll be right back, folks.
Yeah, it's always better when we're together.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
We're off to the races. We got the Dow off 60 points, trading out at 15,948. S&P down 4, trading at 1796. Composite down 4 points, trading out at 4041. Russell 2000 off 3 points. That's trading at 1125.99. Apple is up $10 here this morning. Must be news on China Mobile out there. Microsoft is down 22 ticks. Google's off $2.70. Leading the charge to the upside is Apple. Right behind them, you got Tesla Motors. That's up about $9, trading out at $132.77. Med Pharmaceuticals, I believe they did a deal with Celgene or one of the other big entities out here. Let's see, who did they do a deal with? Not sure. Sorry, I didn't write it down. But they are up a nice 69% here this morning. You got Canatis Pharmaceuticals, they're up 29% here. CNAT is their ticker symbol. You've also got 3D Systems, that's up about $2 right now. You've got Abercrombie and Fitch, A&F, that's up 3%, that's up $1.28. Genuine Parts Company, GPC, up 1%. QEP Resources, that's up 3%. To the downside, Amazing Amazon, AMZN off about $5. That's the leader in the clubhouse. To the downside, not much in a percentage move, off 1% here this morning. Visa, that's down 2% off $4. Krispy Kreme donuts, a little bit of creaming going on there, down 15% this morning, off $3 and change. Lee Eidos Holdings, LDOS, off 8%, down $3.86. Western Gas Partners, WES, that's off 4%. Yum Brands down 3%. Bank Montreal, BMO, that was pretty poor, wasn't it? That was off 3%, down $2. Lumber Liquidators, a little bit of liquidation going on there, trading down about $1.52. Rackspace Holding down $2. Randgold Resources, GOLD, they're off $1.50 here this morning. Again, our call number is 877-927-6648. Had some requests to go take a look at some equities here by email from listeners, so thanks for sending all those cards and letters. Let's go take a look at some of these stock charts. The first one we'll take a look at, ticker symbol is HTZ. Hertz is the ticker symbol. And if we take a look at it, so how would Steve-O begin taking a look at this stock chart? Let's take a look at all of the different tools that we use here. So right now I'm just pulling this back as far as I can, getting as much data as I can on my screen out here. And let's just run the old primary trading range boundary lines on here. We'll just hit this little button. It'll go out there. And what it's trying to do here right now, it's not trying to. It's taking my screen and just breaking into all kinds of little chunks out here, and it's identifying the largest number of co-located opens and or closes. Doesn't matter whether it's an open or a close. It identifies the largest concentration of those areas, and that's right in the $10 range. $9.94 is the exact number out there, and that was the largest concentration of co-located opens and closes. The next area came in at around the $15 range, so about a $5 trading range that you've got inside this, the bottom of which is $4.94. So there's all of our primary trading ranges. Now, those are the horizontal areas of support and or resistance out here. In this case, if we take a look at Hertz, this thing here had come down with some, well, first a gap down. That was the trading session of September 26th out there. And as then it was capping down with volume. That was the first time that we saw any kind of significant inside of Hertz, any kind of significant selling by any institutional investors. This had some nice institutional buying. That took place on this gap up, and that was on August 27th out here, August 27th, 2012. And it had a one heck of a nice run out there. Now, as it was making a high out here, the first time we saw some institutional selling back on September 26th. Hey, how would it have helped you to understand where that primary trading range boundary line was at $19.94, right around that $20 level? Well, price moved down there with some significant volume, 74 million shares on November the 5th. That seems to have held things in place right now. All that it's really trying to do, and I think the question was, is this just trying to fill the gap? And I have to say the answer is yes. It's running into perhaps a little bit of resistance. This is the daily chart, so it's up a bit here this morning. It's trading out at 25.06. So I believe that the listener was looking for a short play. I would say, yeah, let this thing get up here, test this gap of September 25th out there. We take a look at just counting the peaks out here. I went ahead and have just created this little peak counter out here. It's not the full Chapman wave or anything, but just very quickly I can just simply go ahead and count peaks and or troughs here. As we take a look at it, it's in the process of making that what Basil calls that leg D, that fourth peak out there. So it's in the process of doing that. I would let that go ahead and complete. It probably completes somewhere around the 25.69-ish range. You'd like to see Hertz come back into that area on less than 4 million shares out there, and you'd like to see that area hold as resistance. That is one of the things you want to do, is you want to see a window get tested but not repaired. And what I mean by that is we put a black line across the screen is you don't want to see it close inside of 25.69, even at 25.70. If it does that, it's a repaired window, and it really no longer acts as a resistance area out here. So the ultimate trade setup on Hertz to the short side with high volume lows out there would in fact be getting up to somewhere above 25.69 intraday, testing that area, closing back below it, and then on the following session, let's assume that it's going to continue to inch up there and make that fourth peak out there, that peak D, then and then the lower close. That might be your time to come in and take a look at a short play. If we take a look also at the relative strength indicator, this thing is moving towards the overbought condition, but it's not quite up there, so it's got more room to run to the upside, and that's what I would be holding off on Hertz. So there's using several of the tools that we teach you here at TFNN. Now, if that is setting up an A to B equals CD down, let's take a look at another tool. Let's take a look at retracements. Let's go from the most recent swing point high to the low, and what we'll see is the 0.786 retracement level is just above that bottom of the breakdown. So it says 25.84, probably where it is headed to. Then you want to see it close below 25.69 out there, and that would be setting up the potential of an A to B equals CD down. Now, the problem with this A to B equals CD down is there is so much volume at the B point, it's going to need some other breakdown in order to get a confirmed A to B equals CD down. But if it does, it says price will probably move to the 1603 $15 type area out here, but more likely your reward to risk ratio, which is what you should be taking a look at, is probably more like the $20 area, and this thing moving in some type of sideways consolidation mode that it is looks like it is setting up here. So that is on Hertz. That's using several of our tools here at TFNN. Let's go take a look at a couple of these other stock charts out here. Let's do the same thing. I believe one came in. Take a look at OGE as a ticker symbol, OGE Energy Corp. So let's do the same thing, same setup out here. Let's try to get as much data as I can on my screen. Let me just do a little scrunching. That is a technical term that we like to use here. Certainly I like to use it. Let's go let our system here go identify the primary trading range boundaries. And one of the tools that I added there on the extreme right-hand side, it shows you what each of those price levels are. Now remember, using that as a guide out here, but this is electronically identifying every open and close that's on the screen, and then identifying those ranges out here. Now, this one has picked up a very tight banded range nonetheless, but let's take a look at it. You can see here, looks like this is had big volume off of the highs out here, so that is a problem inside this equity. That was on November 26th. I want to add a couple more things out here. Let's instead, in the last chart we took a look at, we did our count up. Now let's go ahead and use our count down tool out here. So let's count the troughs, so to speak. So we'll do the countdown. You can see right now it's in the process of creating that third level out here. So that means that this likely wants lower price. So the 3340 area, that's your next area. It looks like this really will come back into the area here where it had gapped up, and this level was tested. Now, the volume there was on March the 15th. That was a sign of strength, opposite of the sign of weakness that we've seen with volume off of the high. So it looks like what this equity will do is come back and at least test the 3221 level. If it can test it on less than 5 million shares, maybe that gap stays open. This is a area of support. That is a window that is still open, because we can see here is that the price inside this equity came back on June 21st. It tested that wide range. That's wide price spread, accelerated volume. It had everything on March the 15th out here. However, on June 21st, came all the way back to that breakout area, did it with 1 million shares, 1 million shares going against 5.4 million shares, never closed below the low of that window, 3221. So that is a active area of support. And that's where I would expect this to find support. If it does not find support there, this should trade all the way back down into and close the gap, and that is the November 14th high out at about $30.37. I believe this is a longer-term holding. This is a holding that was transferred over from a parent to a child out there, and this thing still wants to run lower. I don't know what your time horizon is taking a look at this equity, but it looks to me like this wants to trade down into about that 119-ish type area. And that is on OGE out there. That is OGE Energy Corp. So that was Hertz. Let's go take a look at another one here that came in. There was a question to take a look at Holly Frontier, HFC out here. So let's go look at HFC. I think this was the question on this was, should I add this to my buy list? So this is a listener that is looking to possibly take a look at taking a long position here. Let's go run the same tools on this. Let's go take a look at our primary trading ranges. So our system's going to go out there and calculate that for us. While we're waiting for that, we got right now the Dow's off 59 points. S&P is down 4.5. So that kind of moves sideways, to a little bit of a bounce to work out that sold condition that we identified on the 120-minute charts out there, the 30-minute charts. That's really what seems to be going on inside of the market here right now. The VIX index, by the way, that is up 41 cents, about 3%. So that is up. That's just adding to being above the 50-day exponential moving average. That is not that's not a bullish sign out there. So back to Holly Frontier. HFC is the ticker symbol out here. Now, a listener is looking for a buy on this. We're going to go ahead and do a couple of things when we take a look at Holly Frontier. I'm going to pull over my other charting system, so we'll use a couple of charting systems here to evaluate this one. So in HFC, let's do the count-up routine here. Let's do that from the most recent swing point low that we've got out there. Let's go see that. So right now it looks like this is, starting. Looks like it had one of Basil's instant restarts out here. So it does look like this is in a nice bullish mode. Let's take a look at volumes here. Let's take a look at A to B equals CD patterns actually first. So let's take a look at A to B equals CD up. We'll use this formation tool. We'll come off of the low from October the 9th. That's our swing point low. That's where we started our counts from. Our counts on the way up, the low of which is 39.65. Our B point on this is going to be the highest swing point before it pulled back. That highest swing point was October 31st, 47.18. Makes a retracement here on November the 7th. That low out there is 42.60. The 1-to-1 A to B equals CD is what it is hit here yesterday. It's where it's trading at today. Let me take a look at the retracement levels here. What that B to C retracement was. It was the 0.618. 42.53 would have been the exact 0.618. It actually got down to a level on November 7th of 42.60. Got to like that, within 7 cents. It created a little doji candle there. That didn't mean a whole lot, but the move higher above that doji candle, that certainly was a bit of a bullish move here. The B point on this equity, let's see if it actually crossed the B point with volume. The B point on this is the trading session from October 31st. We'll put a red line across that. We'll do the same thing on the bottom here where we've got some volume. So we'll come across. We can see that B point was, in fact, confirmed. It was passed with volume. It did that on November 25th, came back and did it again on November 27th. So there's your confirmed A to B equals CD up. So where is the buy on this equity out here? Let's also take, because it did confirm an A to B equals CD up, that also could be a Gartley sell pattern, right? So what we want to do here is we want to take a look at our retracements. Let's take a look at retracements off of the high out here from March 5th. That was in 2013, by the way. That was out at 59.20. Let's come all the way down to the swing point low on July 5th out there. That's at 39.98. You can see 51.48 could be an area of resistance. That would actually form a Gartley sell pattern out there. So you're going to want to be paying attention to candles and how this area here is attacked. What I would say is that, at this stage, the market is in a very close to a correction mode, very close to, in fact, today, let me pull this up on my screen, and then I'll give you the actual number to pay attention to today. Right now, as we speak, in the ES Mini, if the ES Mini closes below 1792.25, 1792.25, that's the number you want to write down on a pad of paper. It closes below that. That is very telling that a change in trend is likely begun out there. I'd say more than likely begun. It's like a confirmation, and so you want to be paying attention to in my opinion, you want to pay attention to the ES Mini on that. So with the VIX being in that, on any long positions, what I would do is I would wait for the market to finish the correction, because what we do know is that it looks as if a trend is changing out here. We won't really know till the end of the day. That's the key. It's about being patient out here. Sometimes it's okay to jump in a bit early and take a stab at things, but on any long positions, I would just sit back and I would wait to see how this market here plays out for the next day or so. Right now, we've got the Dow off about 64 points. We'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is better when we're together. Welcome back, folks. See, Dow down 50 points right now. The S&P is off about 3. NASDAQ composite down about 2 points. A little bounce to work off that sold condition. That is what's going on as we speak at the moment. Let's check in on some of the currency pairs out here. Let's go take a look at the Queen. Let's go see what she is doing. That is the weekly chart. Let's take a look at the daily chart for the euro U.S. dollar, see what it is doing out here. Now, it's moving. It's still in the process. Let's clean up this chart a bit here so that you can take a look at it. It's still in the process of potentially forming the B to the C swing. The B to the C of an A to B equals CD up inside of the euro here. At this stage, I can't give you. What I can tell you is you've got strong support at the 134 level out here. Let's take a look intraday and see what it's actually doing. Let's go down to a 30-minute chart and take a look at the euro U.S. dollar. So we can see here on this bounce, on this retracement, it's up in the extreme over bought condition, so it needs to work that condition off by pulling back out here. If we take a look at retracements on the 30-minute chart, let's come from all the way up here. That's at about 1:30 in the morning. That was on Friday, down to the low that was placed last evening, right around 9:30. And you can see it's traveling right around the 0.68 retracement level, which is 1.358. The body, again, of the candle is truly the essence of price out there. Let's go to Andre in Houston. Andre, thanks for calling. Thanks for holding. How are you this morning? Andre, do we have Andre?
Hello, Steve?
Yes. Hi, Andre. How are you this morning?
Good morning. Yourself? You doing real good today? I
am. Do you have a nice Thanksgiving holiday?
Oh, man, I really enjoyed it. I wish my grandkids were around. They had, extended family to go visit because they were like newborns, but I still enjoyed it, though.
Oh, good. All right, so let's see. We got 2 minutes here. The 2-minute drill looks like we're going to be playing. Great football, by the way, over the weekend. You want to take a look at FR, but we could talk about that another time. You want to take a look at FREE, Free Seas.
Before we get to that, I wanted to ask you one important thing. We're looking at the ES, Mini, the VIX, Euro, Yen. Tell me the level of importance out of those three from 1 to 3 to you, from your standpoint.
Well, right now I'd say the VIX is important to be monitoring because as long as it is above the 50-day exponential moving average, that is where the largest damage is done inside any market. If you take the VIX, and I don't care what levels it's at, if you go back as far as you can on any chart, anytime it gets above the 50-day exponential moving average, it says you've got to really be cautious out there. Now, it can be a one-hit wonder. It can be a one-day wonder getting above it. But, today so far, gapped up a bit. And so with the VIX being above that 50-day, it really says to be cautious out there. So that was, you gave me the VIX, the Euro-Yen. The Euro-Yen is a directional. Yeah, it's really a directional indicator. So it just helps on really confirming. Now, what I do know about the Euro-Yen is divergences will resolve themselves in the direction of the Euro-Yen. So we want to see the Euro-Yen, if it's pulling back and the market's pulling back, then there's nothing really to be paying attention to much there other than just knowing that we don't have a divergence. The ES Mini, that perigee, you had asked about lunar phase the last time. Knowing where price is at on perigee and apogee is absolutely the most important element there. So I would put the VIX first, and then the ES Mini, and then the Euro Yen. And that was our 2-minute drill. But you're welcome to call back in the next hour, hold on, or what have you, and we can take a look at free. All righty. Okay. Folks, have a great Tuesday. Thanks so much for joining us, as always. Have a great Tuesday. I look forward to seeing you soon. Maybe it's in about 6, 7, 8 minutes. Take care, folks.
Well, it's always better when we're together. Yeah, it's always better when we're together.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.